Welcome to The Economy magazine at I-24 News. I'm Natalie Ehrlich here with a look at the world's economic highlights. Coming up, Palestinian officials initiate a boycott against 6 Israeli food makers, and we examine whether it could be an economic opportunity for the Palestinian market. Meanwhile, some foreign governments have shut down money transfers to Somalia, fearing they're not used for remittances, but rather terror financing. But first, let's start now with the headlines. As Greece and the Eurozone engage in negotiations, Germany is currently resisting any push for the European Central Bank to allow extra emergency funding to Greek banks. Greece is now aiming for an aid package that does not force it to enact severe austerity measures, which have led to the challenging economic times for Greeks. In large part, were brought the rise of the Syriza party in power. Meanwhile, the Eurogroup has not offered any softened deal so far. Well, after talks broke down just earlier this week, the ECB's governing council is now taking a look at Greece's ability to keep its banks stable. The ECB is not expected to lower the lending ceiling, but refusal to raise it would be hard for Greece as they come close to the renegotiation deadline. Meanwhile, the Japan Post Holdings company, facing the decline in domestic interest, launched a global expansion strategy with its largest deal ever. The financial giants agreed now to a $5.1 billion takeover of Australian Toll Holdings Limited, a freight and logistics firm. Well, the cash purchase will now give Japan Post a foothold in 55 countries, surging its earning power and just in time for its planned listing just later in 2015. The state-owned company aims to become a leader in the international logistics while positioning itself to become one of the world's largest financial institutions. Well, the French government is now planning to pass President François Hollande's economic reform bill by pronouncement, which would ensure that the bill gets passed without any political hurdles. Now, this reform package includes rules to broaden trading hours and to deregulate certain sectors in a bid now to convince the European Commission to give France more time to get in line with EU rules on public finance. Though the bill was expected to pass on its own, the Prime Minister Valls decided not to take a chance. Still, a move like this is rare in France, and it signals that the opposition will most likely seek a confidence vote.
The French Socialist Party will end up like the Greek Socialist Party with 5% of the votes. They're sending the country into an economic crisis. They're not resolving any of the problems, and the only people they are answering to is Brussels.
And finally, Russia and Hungary have come now to an agreement on Russian gas delivery to Hungary. The Prime Minister Viktor Orban said that the deal would include access to unused gas from the previous deal that expires just this year. And this amounts to 22 billion cubic meters, enough to last 3 to 5 years. As Russia finds itself more embattled with other EU nations, this deal may put more Russian gas reserves in Hungary. The Russian President, Vladimir Putin, meanwhile, for his part, suggested that there is interest in building a pipeline there to circumvent Ukraine. Now, currently, reserves of Russian gas in Hungary stand at 700 million cubic meters.
Only technical questions remain. The political agreement has been born. Within the framework of the current contract, there is a possibility to use the gas that we have not used and pay at the time when we use it.
Well, Palestinian officials have initiated a boycott now against 6 Israeli food makers, largely in response to Israel's decision to withhold tax and tariff revenue from the Palestinian Authority. Now, this move is not just political, though. It might actually also test the depth of the Palestinian market.
The international boycott, divestment, and sanctions movement is gaining steam in much of the world, with calls to boycott Israel growing. Meanwhile, a committee representing most Palestinian organizations and business leaders in occupied territory last week recommended a ban on sales of 5 major Israeli food brands in Palestinian West Bank stores. The ban will go into effect next week when the committee chair from the Palestinian Liberation Organization said proprietors will be asked to remove food products from companies including Tnuva, Osem, Strauss Group, Prigat, and Jaffa. Still, according to the Israeli daily Haaretz, Tnuva, which stands to lose the most, only does about 3% of its total sales in Palestinian-controlled areas, and Osem does about 2%. The Palestinian decision was made in the wake of Israel's punitive response to the PA's move to charge Israel with war crimes at the International Criminal Court. The measures include delaying the transfer of tax revenue in the amount of $100 million per month to the Palestinian Authority and ongoing building of Israeli settlements in the West Bank, considered illegal under international law. Israelis have mostly dismissed the move, suggesting that even if the boycott is enforced properly, a black market will emerge for the goods. According to a report from Ynet, a leading Israeli news site, Israeli food exports to the West Bank hover at around $700 million worth. The Palestinian economy relies heavily on Israel. As of last May, more than 86% of exports went to Israel, while 65% of imports came from Israel. The aim from the Palestinian angle is to help spur forward Palestinian entrepreneurs looking to fill the void with made-in-Palestine products.
Well, now for an inside look at the numbers on this matter, we are joined in studio by our one and only Ayman Siksek. Thank you so much for joining us today.
Thank you for having me. It's good to be here. So as we just saw in the report, the numbers of the exports and imports between Israel and the Palestinian authorities are rather high, making the Palestinian economy really dependent on Israel. And actually, this ban will also be hard to enforce within the Palestinian authorities. The customs went as far as saying that they will have representatives on the borders to see that this is actually being implemented. And what that proves to us is that some parts of the Palestinian Authority or the Palestinian territories do want the Israeli products. And surveys show that throughout the years, Arabs within Israel really prefer the Israeli companies, especially Tnuva dairy products, because they're cheaper than the ones Israel imports from the outside world, especially Europe.
Well, do you think that this boycott could have a real impact on the Israeli economy?
Well, right now, estimates say that it will take away from Israel about $300 to $400 million a month. Now, that might sound high, but that's actually a very small part of the Israeli economy. Israel, obviously, is not as dependent on the Palestinian Authority financially as is the case otherwise.
So is this move actually just going to impact the Palestinian economy and what people buy there?
Well, you know, the Palestinian economy is really right now trying to develop its high-tech industry. So within the dairy products and the products that we see that are being banned, it's not likely right now to increase entrepreneurship there. It might increase sales of local products, but what Palestinians are now focusing on are building smart cities. They're really trying to diversify their economy in other ways, especially in Ramallah.
Well, how about Palestinian products? Are they popular within Israel at all?
Well, there's one particular Palestinian product that's hugely popular in Israel. It's beer. It's Taibeh beer.
Oh, I've had it before. It's excellent.
Yes, most Israelis recognize this product, and it's actually the only Palestinian product recognized by Israelis in a wide range. But otherwise, most Israelis do not know or do not consume Palestinian products on a daily basis.
So just to recap here, what do you think are going to be the main outcomes of this boycott?
It's basically a political move. It's more Palestinians expressing their anger or fury with Israel over the recent conflict, especially the war in Gaza has made this effect, Protective Edge in August last year. It does, though, come as part of a larger worldly movement of trying to boycott Israel. Of course, we know of the BDS movement. So there's a political statement being made here. However, financially, it's not likely to impact Israel too much.
Well, thank you so much for your insight. As always, Ayman Siksek. We do appreciate it.
Thank you, Natalie.
Well, now let's move on with the rest of our coverage here. Some foreign governments have now shut down money transfer services, fearing they're not being used to send remittances, but rather to finance terror. And we now take a look at the impact this is having on one family in Somalia, as well as the broader economy.
All throughout Somalia's decades of conflict, Safia Hassan's family grew. She now has 6 children, all enrolled in school. Though her husband is unemployed, she has never sought an aid handout. Instead, she's relied on remittances sent from her brother-in-law who fled Somalia for the United States in 1993. But the main money transfer service from the United States has just blocked its services to Somalia, cutting off a vital cash flow for many like Safia.
We used to get monthly payments from the US to pay our children's school fees and to buy food, but now we're not getting any money. So we ask the US and the government of Somalia to cooperate in lifting the ban.
According to aid agency Adesso, The Merchants Bank of California handled up to 80% of the $200 million sent annually from the United States to Somalia. With no formal banking system in this impoverished country, money transfer services are one of the few legal ways the Somali diaspora can send money home. Annual remittances total some $1.3 billion, dwarfing foreign aid. The Somali government has called on the United States to reconsider this decision.
The closure of Somali remittances shocked us. It's causing difficulties in the country because Somalis here depend on their relatives abroad. Many families have been hit hard by this move, and they cannot buy food and clothing.
Foreign governments are concerned that transfer services are used to launder money or fund terrorism and Islamic extremists like Al-Shabaab. But aid agencies say regulatory pressure is throttling the life-saving inflows. Just last month, the United Nations warned that over 38,000 Somali children are at high risk from dying of starvation as the country grapples with drought and acute food insecurity.
We're talking about food, we're talking about shelter, education, very basic things. If that's cut off, these are people who are not dependent on the aid business, on the aid sector. They weren't humanitarian beneficiaries. So now they're all going to come into the humanitarian caseload, and we're not going to be able to meet their needs. We weren't able to meet the needs of the last 260,000 people that died in the last famine. So it's quite catastrophic.
Somalia is desperately trying to rebuild after decades of civil war. If the remaining legal routes of remittances are definitively shut down, experts worry that the country's fledgling economy will falter, forcing people like Safio to depend on foreign aid handouts just to survive.
And now for a closer look at what the media has been covering, we are joined in studio by Daniel Roth. Thanks for being here. What do you have for us today?
Thanks for having me. The first story is from the Wall Street Journal, American paper, talking about my home country, Canada. In Canada, they didn't actually enter the first Iraq war. Now that we're seeing kind of a new Iraq war start, where you see the coalition building against ISIS, Canada's joining this. Now, the economic side of this is that this is going to cost somewhere around 900,000 Canadian dollars a day, which is around $720,000.
Wow.
That's a day. So that's 900,000 Canadian dollars a day that this is going to cost, and it's a remarkable amount. So Canada's Parliament voted that they're allowed to go in for 6 months. They may re-up for another 6 months. 12 months in Iraq will cost the country something like $350 million. It's an enormous amount of money for a country that actually popularly didn't want to go in the first place 10 years ago.
Well, how do you think that's going to receive in the public there?
It's already being received negatively. The current Conservative government, which got about 40% of the vote, has made a number of unpopular moves with the other 60% of the country.
Do you think that we could see demonstrations like the kind we saw in Vietnam back in the day here?
Absolutely. You know, in 2003, in March 2003, those were the biggest demonstrations in the world in history, and in Canadian cities they were among the biggest numbers out in the streets. Major intersections were shut down. It sent a loud and clear message that people weren't willing to go in at that time. There's a difference now. The discussion around ISIS is very different from the post 9/11 discussion around Saddam Hussein. It may be that people get more used to it 15 years into the post-9/11 world. Canada is a different place, as is the rest of the world.
What else do you have for us today?
So Fast Company has this interesting story on the gig economy. This is sort of the drivers of Uber and Lyft. This is the cleaners for Handy. These are companies that don't employ people. Rather, they say that they connect workers with customers. Now, this is a dangerous field because on one hand, for workers, it means that they're not getting benefits, they're not getting protections, they don't have regular labor contracts. But On the other side, the companies are opening themselves up to lawsuits, as is the case in this article, where a pair of sisters who had been working for a cleaning company that wasn't a cleaning company, they were an agency, they said. They didn't employ these sisters. They're being sued for a few $100,000. It could turn out, if they win this lawsuit, for all of their other workers, the 2,000 people who aren't their workers, they say, they're contractors, this could be hundreds of millions of dollars that will cost. Now, right now, 20 to 30% of labor costs are cut by not paying for benefits.
Thank you so much for coming on the program. We do appreciate it. That wraps up our global economic coverage today. Join us again tomorrow at the Jaffa Port, same time, same place. I'm Natalie Ehrlich. Thank you.